Thanks so much for tuning in to India Market Close. It's a session wherein, actually I don't need to tell you, let's just pull up the indices and you will see it's a session that's virtually nothing, if you will. And it's been this way since the start. Maybe a 0.25% lower at the start of the trading day, but absolutely flat. Bring up the mid caps and the small caps for a bit. And see what they are doing in trade as well. Look at that, the Nifty mid-cap index flat. By the way, this was a performance yesterday too. Small caps were the outliers yesterday. Today, they are not the outliers. Extremely flat day. And IT sulked big time in trade today. The expectation was that the ISG data could actually help spurt IT. Hasn't happened. Yes, it's off the lows. It's no longer down about 1%, but it's still down 0.5%. So not great. Advanced decline ratio would be kind of, maybe in slight favor of the declines, if you will, but almost converging, as you can see here. So all over the place, but very, very flat. Bring up the heat map and show you what's moving and what's not on the large cap space. Again, even Stevens completely, right? Yeah, almost there, 24 to 26. What's done well? HDFC Life, I reckon. The management commentary and the City note, and amongst others, helping the stock today. Some strength in Dr. Reddy's, Reliance Industries, Bharti Airtel, and the two telcos doing well for themselves. ONGC marginally higher, HDFC Bank marginally higher. So that is what is helping the index today. What's not helping is some of the high flyers correcting. Trent down, a lot of auto names are down. M&M, Hero MotoCorp, Tata Motors, all of them in the red today. Lastly, before I hand it over to Hersh, bring up the point contributors and you will see HDFC Bank and Reliance being the principal reasons why the market is afloat. Look at that. 50 points out of the 90 because of those two. That is the reason. These two are the reasons the index is actually in the red. Otherwise, the texture isn't necessarily the best. But Hersh, what about the broader end of the spectrum? What's moving?
Well, Niraj, very similar texture, right, in terms of how broader markets are also reacting. The only possible positive here is that, we've flattened as well on the broader end of the market as well. From those days' lows, we've bounced back slightly higher. So that's the one key positive that I would take away. In terms of specific stocks which are buzzing, let's first talk about earnings. Earnings candidates, KEI Industries, a fundraise, 2,000 crore plus. Numbers not impressing the street at all, 6.5% lower. Rallis, on the other hand, doing very, very well. Clearly responding to a good crop likely, and 16% higher, 20% on PAT. So good growth numbers overall in terms of where Rallis is concerned. Let's also pull up something like an SG Finserv in the broader markets. It's around 2% lower, sharply lower numbers on a year-on-year as well as on a sequential basis. So a bit of a drag on that count. Let's also talk about some other movers in trade. Railtel is up 8%, very small order win, but nonetheless the stock on a tear. PNC Infra, again order wins galore within the infra space. So PNC Infra, GR Infra, Ashoka Buildcon, all of those stocks buzzing on the back of new order wins coming through. Strides Pharma doing well, 4.5% higher. A tie-up there for Strides Pharma also aiding that stock. Sansera Engineering is also up. Fundraise for Sansera, that one is a buzz. A Godrej Properties is up 2+% on the back of 3,500 crore possible revenue from 3 to 4 plots that they've purchased in the MMR area. So those are some big buzzers, at least on the positive side. On the negative side, OFS keeping Cochin Shipyard 4.5% lower. Pressure there. Zydus Life news reports suggesting that there's going to be some adverse impact with regard to one particular product. Stock is 4% odd down. Newgen Software is also down. A second consecutive day post results despite a very strong set of numbers. We spoke with management. Stock sulking in trade. Those are some big movers. In terms of brokerages, and we have so many today, let's talk about AB Sun Life. Of course, not on brokerages, but the entire AMC pack, HDFC AMC 6.5% higher, AB Sun Life AMC 12.5% higher. So keeping all of those in focus, just the way in which that move has happened, 12.5% on AB Sun Life. HDFC Life, of course, Niraj touched upon that, 2.5% higher. AB Real Estate, Aditya Birla Real Estate, 1.7% higher. Very strong note coming in from Nomura, nearly 30% upside there. BSE, of course, pick of the lot, 4% lower on the back of that Jeffries note. So plenty to talk about, Niraj. It's that kind of a day that despite the markets being flat, there are plenty of buzzers both sides.
Let's try and take the expertise of our guests then today to try and understand what to do in a scenario like this. Richard Jain, lead research analyst, 5paisa, Shivangi Sarda, tracking derivatives and technicals at MOSL. Both of you, thank you so much for taking the time out and being with us. Shivangi, I'll start with you. And you guys gave a great call in the morning. Chandan was with us and you're talking about Siemens and beautiful intraday move. So great going. Kudos to your team and on that. But I want to start with a call on the Nifties. Shivangi, is there a trade there or are you avoiding the index completely?
Good afternoon. Thank you for having me. So we've seen that, Nifty index has been taking some sort of a, consolidative range-bound move over here, even though the support is intact at 24,850 levels. There is some sort of, call writers who are increasing their position, which is making the upside capped as well. So it's struggling to hold above 25,000 marks, and we are seeing that, it's not been able to sustain above its 50 daily exponential moving averages today. So overall, we are witnessing range-bound move over here. So one can go for a strategy-based, year to apply for this index. But the levels per se, important support would be 24,850 to watch out. For the upside, next hurdle at 25,350 levels. So this will be the range for Nifty. Of course, index has been moving in a very tight range from the last 5 sessions, and we're expecting some sort of more consolidation or pain over here to continue.
Ruchit, let me switch over to you. Thanks for that comprehensive take on the Nifty. Ruchit, Bank Nifty.
Yeah, hi, very good afternoon to everyone. Well, we have seen that both the indices have traded within a range, and if you look at the data, so primarily this range-bound move in last 4 or 5 trading sessions is there because there is no new positions getting formed by FIs or even the client section in the FNO. The recent correction which came from the highs, from the all-time highs, was mainly because unwinding of long positions and short formations by FIs. The long-short ratio has declined to 35%, but it's stable since last 4 or 5 days. So we are not witnessing any unwinding of positions of the short positions which have been formed. Neither fresh short positions are getting formed at current levels now. So until we see any change in the data, I think that range bound move continue. But relatively, if I look at the banking index, then I think here the recent pullback move has been led by private sector heavyweights, and the 38.2% retracement has been done of the recent up move. So I think still some range bound move could continue. But 51,400, 51,300 is a good support range for the stock till that is intact. We expect the dips from year end to get bought into. So in case if we get any dip towards that 51,500, 400 range, the risk reward ratio would become favorable to take some contra buys over there.
Okay, range bound, buy on dips. Ruchit, your picks this afternoon.
A couple of recommendations on the long side. First would be the heavyweight Reliance Industries. Now, before the numbers itself, the stock prices have corrected in last few trading sessions. So I think most of the corrective part is done. Secondly, if you look at the weekly charts, then the 100 weeks exponential moving average is coming around 2,680. And today's low so far is around 2,675. So it's trading around that medium-term support. Last time also when the stock went through some corrective phase in August, September 2023, this 100 DMA on the weekly chart acted as a support, and so we believe that risk reward ratio is now favorable to take contra buys over here. From a trading perspective, one can go long with stock below 2670 for potential targets around 2800, and Voltas would be my second pick, where a high top high bottom structure has been seen, price up move supported by good volumes. So I think this is just a resumption of the uptrend. With a stock below 1800, short-term traders can go long in Voltas as well for potential targets around 2000.
Shivangi, let me come to you on your picks this afternoon.
So absolutely first on my radar is Bharti Airtel, which has been making higher bottoms from the last 8 odd sessions. And we've seen that it has been, respecting its crucial exponential moving averages on the daily frame very perfectly. RSI is also turning from the lower levels. And we've seen that this stock has been, one of the star performers of the entire sector. Even on the month-on-month basis, we've seen that this stock, in fact, has, moved consistently from the last 18 months. So any small declines here could act as a good opportunity for buying. And right now, with the buying interest emerging, the stock looks quite lucrative for the next target of 1800 levels with a support of 1700 zones. Now, my second pick would be on Voltas. We've seen that there is good action over here as well. Of course, there's been a recent development that the room AC sales are estimated to grow by 20 to 25% to 12.5 million units in FY25. So with this conducive environmental change that we are witnessing in the climate and the favorable structural factors of the company, the stock is to sustain its momentum with the upbeat in the pace of the demand. But technically speaking, the stock has exactly retraced from its key levels and showing buying interest after taking support near 1750 zones. So noticeable volumes here will add to this stock, and definitely we are expecting the stock to move higher towards 1960 levels with a support of 1840 zone.
Okay. Thanks for those ideas, and it's great to get those ideas as well today. Some stocks have really flown. I think a bucket that has done really well, on which we would want both our experts to comment in a moment. But I first want to show what's happening to the capital markets place. So everything, and let's pull up those stocks from HDFC AMC to a Nippon India Mutual Fund to Nuvama Wealth to Motilal Oswal Wealth or Motilal Oswal Financial Services, Angel One yet again, CAMS, everything related to the capital market space has done remarkably well. UTI AMC, another case in point. Now, Hersh, the thing is, everybody tries to find reasons as to, is there a trigger today or is there a trigger that's happened tomorrow? But maybe in this pocket, there is not necessarily a day's trigger you need to look at, because financialization of savings is such a real and present theme that people think of where India being where US was maybe many years ago, and then try and look at what happened to some of the surviving financial institutions in the US over a 15-year period. And if you can really pick institutions which will survive in India, which are catering to the capital marketplace, you really don't need to hunt for too many other things, because it is alive, it is present, in unfolding in front of our eyes and creating wealth, and probably the runway of growth is very large.
It's not hard at all. Niraj, you're absolutely spot on. 15% growth is what the Nifty has given us over, say, the last 30, 35 years, which is roughly my age. 15% compounded. And maybe if an institution can grow just 10% over and above that in terms of fresh flows, new clients and the like, it's not very difficult to extrapolate 25% growth. And I think that's exactly what's getting recognized and being built into valuations now.
Yeah.
You had a CLSA view coming through on an HDFC AMC today,
which we are going to go to in moments from now.
Yeah. And they're valuing HDFC at 35 times forward earnings. And therefore, not looking too expensive either, just illustratively. Not looking too expensive either for a 25% kind of growth engine. If you're looking at a 10-year horizon, of course, maybe there'll be cycles, and that's possibly the risk.
Yeah, and viewers, keep in mind, this 25% is a very powerful number, because if you can grow at 25% for 3 years, you're roughly doubling your money, and then doubling your money again if that growth continues. And 25 is a tall number, by the way, so keep that in mind. But be that as it may, this is remarkable what's happening to the capital marketplace today. On cue, Devin Choksi Johnson, Managing Director of DR Choksi Investment Managers. Devin, great having you. Thanks for joining in. Tell us, I mean, you run a capital market play yourself. Just wanting to understand, do you believe that if between a 15 to 25, and the number could be anything, but is that kind of growth possible for a capital market firm, whether AMC or whether Wealth or what have you, for the next few years, for the rest of the decade, for example?
Yeah, Niraj, good afternoon. It's absolutely doable kind of a proposition. Look at from where we have come to what we are now and what we are likely to be. In 10 years back, we were a market cap of around 2 trillion USD. Today, we are 5.5 billion USD. 10 years from now, fast forward, we should be somewhere around 12 trillion USD, which means that I think in 20 years' time, the market capitalization is growing 6 times. It has already started bringing in the number of investors into the market, so which is a very large possibility which we have because of the demography that we possess. Today, if you are having around 42, 43 lakhs, 44 lakhs new investors joining in every single month in the demat accounts, I would think that I think it is a matter of time when you would probably see somewhere around number of investors total on the market platform, somewhere around 50, 60 crores. In a span of next 10 years, we are going to experience that part of it. So which is a fairly large number. And as a result of which, I think you are likely to see the activities happening with all market intermediaries, be it asset management companies, be it brokerage companies, be it depository companies, be it stock exchanges themselves. I think this entire activity spectrum is going to expand and expand very full. Now, this is a long-term possibility. That does not mean that I think tomorrow every company will start producing the profit out of that. But the fact remains that I think if these companies have laid down the fabric, they are likely to become the brand owners of every area in which they are operating. And as a result of which, I think the investors' confidence will remain higher. So certainly, apart from generating the revenue, profits, etc., I think these are the companies which are going to possess the kind of brand in this particular space in which they are operating. We believe that I think the possibilities are endless. We believe that new products coming into the market, they are also going to be, I think, quite smart. And we believe that I think exchange platform per se could act similar to what I think the e-commerce platforms are acting today for the consumer goods in form of investment products, be it equity, mutual fund, insurances, fixed deposits, or whatever other products. Exchange platform has a huge amount of possibilities because of the financializations are happening. So exchange, depository, brokers, AMCs, all of them are likely to see the sizable amount of growth. Winners will have to be chosen, of course, I think based on their game plans.
Thanks for that context, Devin. Of course, 25% compounded for 10 years is 10x in 10 years. I mean, just technically, just putting it out there. So that's the kind of number one would look at if you do a 25%. But anyway, let me switch, or rather, let me keep focus on the AMC pack, because CLSA 1 upgraded HDFC AMC from hold to outperform, hiked the target price sizably to 4920, lifted EPS estimates by 5 to 9% over FY25 to FY27. Yield moderation, they believe, is going to be going forward is going to be at a softer pace. AUM growth is ahead of expectations, according to them. They are expecting, for HDFC AMC in particular, tax rates to likely normalize next quarter onwards, so that should aid the numbers as well. And they prefer AMCs over the other buzzer in trade today, which is life insurance companies. But that's what they prefer in the near term at the very least. 35.5 times September 26 EPS is how they value HDFC AMC. Citi, on the other hand, slightly less constructive. They continue to hold their sell rating, 3,600 being the target price on HDFC AMC. They believe that the favorable shift towards high-yielding, actively managed, equity-oriented funds is obviously a positive for them, and that's why they've hiked the price from 3,100 odd. But they believe market share trends have now stabilized and expect stabilization in earnings trajectory even over the medium term. They've rolled forward their estimates, and that's the other reason why they've hiked the target price from 3,100 odd to 3,600. But that hike is quite large, and therefore you are seeing that kind of reaction on HDFC AMC. One, of course, bullish, the other one bearish, but overall very constructive. Devin, let me come to you again on this one. HDFC AMC, and then you have life insurers. Would you at all prefer maybe life insurers over the AMC pack, or does AMC, given the kind of run-up they've had versus life insurers, would you therefore prefer that at all? Does that look better to you?
So maybe I think interesting habits and interesting changes are happening across. Up till now, the life insurances have been attracting more amount of new policies in form of endowment plans. But as we see, I think the people have started getting the maturity. They don't put money in endowment plans. They put more money in the term plans. So as a result of which, the percentage-wise, if you look at the amount of premium that you collect, has possibly come down, because in earlier period, I think along with the endowment plan, the life plans were sold. So certainly, I think the amount of premium was also on a higher side. Investor has become smarter. He's putting money separately. Instead of putting into endowment plan, he's putting money separately into mutual fund plans, and he's putting the term plan money separately. So if the life insurance business, I think to summarize this particular thing into numbers, if the life insurance business, I think, is expected to grow at around 17 to 18% with the new business premium, the similar kind of a growth, if one has to see into the mutual fund AMCs, I think it could be somewhere around slightly higher, say 20%. Also because of the fact that if the economy is growing at a nominal rate of growth around 11.5% or so, it is safe to assume that in initial period till the financialization process is, I think, accelerating, I think the growth in the collection of premium or in case of, I think, the mutual fund AUM would be easily 50% above the economic rate of growth, so which is around somewhere around 17-18%. So I believe that I think both of them will grow. Maybe I think AMCs will probably have better levers because of the multiplicity of the plans that they would have to offer to the investors of every class.
Okay. Well, we have to shift focus to pharma for a moment, and woes for Zydus Life Sciences because the U.S. federal judge has ruled in favor of Exelixis in a patent dispute over a cancer drug. Varsha has some details. Varsha, over to you.
All this means that Zydus Life Sciences, through its partnership with MSN Lab, had faced a legal setback in an attempt to launch a generic version of a cancer drug. Now, the US federal court ruled in favor of the Exelixis, which is the original patent holder, stating that the MSN generic version infringed on Exelixis patents. Now, as a result, MSN and Zydus, as a partner, is barred from launching the generic version of that cancer drug until the patent expires in Jan 2030. This delays Zydus' plans to enter the market with a generic version, potentially impacting its revenue from this product line. Now, this ruling upholds Exelixis' control over the drug, preserving the market exclusivity for several more years. So this is the reason why we are seeing pressure in Zydus.
So pressure in Zydus. To discuss this further, we are joined by Nimish Mehta, founder, director of Research Delta Advisors. Welcome first off, Mr. Mehta. I want to first ask you, just give us a context, quantify this for us. What's the impact on Zydus Life going to be like in terms of numbers?
Well, I mean, because this was a product that is likely to be launched in the future, how much can it generate is always going to be a guess. But let me just give you a context to this. So Zydus Life, along with MSN, was the first to file, and hence they've secured exclusivity, which means that they will be the only one to be launching this product whenever they launch for 6 months, and that is a big thing for any company. And this is $1 billion product, so obviously you can assume $100+ million out of this product for Zydus Cadila and MSN. We don't know the partnership details, but put together, they might be able to generate so much. And this outcome also doesn't change the fact that they will continue to make so much money. It only changes the timeline of the launch.
Right. And so how should you, so fair, so it pushes the timeline, but pushes it to FY30 on, right? So that will certainly change things overall in the context of things, because likely 4 to 5 years in terms of getting a foothold in a product like this would get pushed.
Agreed. I mean, I really don't know what was the market's expectation, but if we look at other para IV filers in the same product, it was very clear that the other two ones were Teva and Cipla, and they had actually settled the case. And according to their settlement dates, they were to launch in 2031. Which means that already some other generics have already accepted a later launch, and hence you can probably extrapolate that even MSN and Cadila would be closer to that, which is what is happening right now. So yeah, it's a matter of expectation. If someone would have expected it to be launched earlier, then obviously it's a setback. But otherwise, it's not. I mean, as I said, the revenue generation does not go away. They will be able to make so much money in 2030 and not, let's say, earlier.
Devin, let me come to you. Same question. Do you believe that this is a huge impact on Zydus? 4% reaction. Is this an opportunity to actually buy? Just give us context.
So I think from whatever little I have understood about the size of the market for this particular product, I think I gather that I think somewhere around $6 billion worth of I think addressable market size that we are talking about. Now, how much I think they would have cornered by way of a generic launch, I think it's difficult to say at this point of time for me. But yes, certainly I think that was an opportunity for them. Had that opportunity been captured, probably I think you would have seen a relatively, I think, better amount of play for Zydus for no doubt about that part of it. Maybe I think it was not to happen in next 1 or 2 years. It was to happen somewhere, I think, the second half of the next 5 years. Probably, I think that is where I think one is not very sure whether it will have immediate impact on a business of the company. But yes, I think it was a good potential, as I could gather from the subject understanding of this particular research work that they were doing on the patent that they filed for the generic version.
Okay. Nimish, one final question to you before we let you go. Between the various pockets, and yesterday we also got to know that there are now companies which are doing Indian CDMO, not catering to global clients but Indian clients, etc. Where is it that you find the best opportunities or runway for growth?
Within the CDMO space, it's hard to.
No, even otherwise. I'm just saying your top area of growth in the healthcare space.
Yeah, sure. So we remain positive about, obviously, on a long-term basis, we remain positive about the domestic pharma. So companies who are focusing on Indian market are likely to grow, but in a sustainable manner. So it may not give you bouts of growth, or it may not give you like spurts, but definitely it's a good market. It's a cash-rich market with sustainability and visibility of growth. And that's why we kind of remain excited about companies who would be heavy on domestic pharma. For sure. And US generics obviously is an interesting play, but it is going to be like this, sometimes you might be able to get some products in your favor and sometimes not. So it will be a very product specific opportunity.
Got it. Okay. Leave it at that. Nimish, thanks so much for taking the time out and being with us. Now, Shivangi, before we let you go, some of the pharma names that are doing really well in the recent past, I would include a Wockhardt in that list, a couple of others out there. Any thoughts on any pharmaceutical name that is standing out on the charts or the derivative position build up?
So Niraj, talking about the pharma names, my eyes are on some of the diagnostic lab space stock. So Divi's Lab has been on my radar. This stock has given a consolidation breakout on previous week on 8th of October. And this consolidation was of the 25 trading sessions on the daily frame. And after that, we've seen a good follow-up action and buying interest even at those levels. So definitely, this is one stock which is stable than the rest of the pack. And we are looking at next 6,300 odd levels immediately over here and then 6,500 still positionally. So this is one stock to be kept on radar with a support of 5,950.
Okay. Shivangi, we'll let you go on that note as well. Thanks for taking the time out and being with us. Really appreciate your time this afternoon. Ruchit, we asked Devin Choksi about this, didn't get quite around to asking you before we hit that break. This whole capital marketplace that Devin Choksi also recommended that, growth is possible. Now, so fundamentally, we've got a view from somebody who understands this space very, very closely. I'd love to know on the charts, which of these stocks looks very strong? Because all of them are flying around.
So most of the stocks which we have rallied have also been supported by good volumes. And generally, when you see such strong price volume action, then that's not just a one-day move, but that uptrend usually lasts for short to medium term. So I think the AMC pack especially, I think could do well. Some of the AMC names, if you see HDFC AMC already gave a breakout in the morning itself, and there's a good follow-up throughout the day. But within the other names, if you have to pick even at current levels, then Nippon India, I think, still looks better at even at current levels where the risk ratio is also favorable. A high top, high bottom structure is in place. 100 DMA is acted as a support. So I think here one can expect targets around 800 kind of levels in the near term. So fresh buying can be done in Nippon with stock below 690 for potential targets around 800. But otherwise, as I mentioned, that the entire basket looks positive because the volumes are quite good along with the price up moves.
Yeah, well, it's a serious bucket which has created some serious wealth, and I think Devin Choksi was spot on when he spoke about this as well. By the way, some flashes in Bharti Airtel. Okay, I mean, on your screen, the stock is already done well in this session today, but the stock up about 1.25% as we speak and trending and ending currently at the highest point of the day. Airtel IQ Business Connect. Okay, we need to slip into a break. As we hit that break, and we continue our conversation with Deven Choksi and Ruchit on the other side, but as we hit that break, hear out Parag Thakkar of Santulan AIF on where he places his top bets and what makes TCS a great buy.
For the first time, I'm seeing TCS being valued like exactly as per the Infosys and HCL Tech. So PE multiples of all three IT companies have converged to 25 to 26 times on FY26 earnings. Now imagine a company which is 15 lakh crore market cap, generating 50,000 crore cash profit last year, which is going to grow at 10%, right? So in FY27, in FY26, I would say, they will end it with 62,000 crore free cash flow, right? On a 15 lakh crore market cap. And the dividend payout policy is such that 85 to 100% of the free cash flow is given to. So I'm getting 3.5 to 4% dividend yield in a TCS kind of a stock. And Fed is supporting US economy. First of all, US economy is not doing that badly. And then and they are saying that they want to keep it there. US GDP growth was also good last. And if you see the earnings of, for example, to start with JP Morgan, they revised their guidance upwards. Goldman Sachs, 45% growth in earnings, right? Citibank, the profit fell, but it was above their estimates, their analysts' estimates, right? BofA. So all these clients of Indian IT services are in great shape. They are in great, although US debt to GDP might look high, but the corporates to which these Indian IT services are catering to are in very good shape. Second space which I would like to talk about is structural space, I would say, is banking and financials, where there are pockets of opportunities. Of course, we all know SBI, ICICI Bank, great buys, it's a consensus buys. But in small pockets also, like LIC Housing Finance, just to give you one example, when we say that India is expensive, and this is, I think, told by Mr. Manish Chokhani in one of his shows, that, see the PE multiples of banks. SBI starts at 7, HDFC Bank is at 13. So we are not expensive. The 35% of the Nifty is not that expensive. Right? SBI, if you exclude the subsidiary value, which itself is very, very highly valuable, right? They can sell stake in Yes Bank, they can sell stake in NSE. If you just deduct all that, it is one-time book value and 6 PE. Now 6 PE for a bank which is financing 25% of your economy, right? So, and as the SBI chairman said, right, that what is good for India is good for SBI, and definitely SBI has to do well. And we are not, for example, in pockets of finance also, there is a stress in MFI, right? There is a stress in unsecured personal loans, right? SBI doesn't do all that, right? So basically I'm saying SBI, ICICI Bank, even HDFC Bank to some extent, or LIC Housing Finance, or Federal Bank, Karnataka Bank, all these are good pockets of value in my view.
Back with India Market Close right here on NDTV Profit. In conversation with Richard Jain and Deven Choksi. And Deven, I would love to understand from you aviation because we are hitting a busy travel season. We have an airline trying to resurrect its fortunes as well, has gotten capital now. Hopefully it does well, great for the flyers. But rates don't seem to be relenting. My question really is, what's your sense on the investable opportunity in the aviation space? Airlines, airports, or some of the connected ancillaries, if you will?
Yeah, good question, Niraj. I guess I think airline remains, I think, as volatile as I think anyone can think about as far as the business is concerned. On one side, you have huge potential. On the other side, I think you have got maximum amount of volatility, either due to economic conditions or due to, I think, the fuel price or other operating parameters. So I think most of the global airline companies' stock price, if you study, they have a typical cyclicality as against, I think, a long-term investor's requirement of, I think, seeing a sustained growth in the portfolio. Generally, the aviation companies probably, they don't end up giving you the CAGR rate of return as much as I think the other ones would give, save and except I think a couple of them in the global market. So I think that is one area which is remain volatile. We don't like it. We feel that I think if you are a quick trader, which means you can take a position for a few years, buy and sell, I think it is a great opportunity, but not otherwise. On the other side, the infrastructure play of airports, I think, and the entire business model pertaining to that, it looks, I think, pure infrastructure model. Again, I think the growth rate would be in the vicinity of around 15 to 20% for a country like India, which is now expanding the base significantly across with different airports. So likes of Adani Airports, I think, which is part of Adani Enterprise, they remain relatively, I think, more strong player because of the multiple segment under which they on their revenues, including the passenger fees, including the other ground level charges that they collect from the airline companies, among others. So they remain, I think, relatively favorite, but I think they are favorite for whom? They are favorite for largely the sovereign funds, the insurance funds, the pension funds. Some of the larger funds, we have a horizon of 25, 50 years. For them, they remain absolutely favorite because they end up generating 15% kind of a return for their shareholders in the course of time. There are other companies which are basically maintenance kind of business providers, I think, to most of the airline companies, and they are relatively strong on the engineering side. However, I think you don't have too many clear-cut examples available in the listed space. So there may be, I think, few names immediately one can talk about in the unlisted space, but they are small. So to my mind, I think if one is an institutional investor, airport companies would probably make more sense because they provide you a good visibility of 25, 50 years as I see.
Okay, great views coming through, in fact. And let me switch focus. Of course, hoax bomb threats spark. Airlines have received around 12 bomb threats in the last 72 hours. Aditya is joining us with more on this, just to kind of cap this conversation off. Aditya.
So there is a scare everywhere when it comes to boarding a flight right now. Because why am I saying this? Because there have been 12 reports of bomb threats in various flights across India in last 3 days. That is, in 72 hours, these bomb threats have been received, and because of which the flight operations have been disrupted. Multiple flights have been diverted from their original routes, or they were sent back to their originating points. Now, there was a high-level meeting that was conducted in the morning today, and Ministry of Civil Aviation was there, Bureau of Civil Aviation was there, Airports Authority of India, multiple airlines senior officials were there in the meeting. And in that meeting, basically what came out was government has made very clear that they are very serious about these hoax calls, and some serious steps are going to be taken. And in this context, there has also investigation has also been proceeding in this context, and one arrest has been made by Mumbai police. today at 4 p.m. there is a press conference in which more details will be revealed about this arrest. But let me tell you that despite this arrest being made and government making it clear that they are very serious regarding this issue, two more security threats came across in last 1.5 hour, and one Indigo flight and one Akasa flight had to divert their route. Akasa flight from Delhi to Bangalore was sent to Ahmedabad, and one Indigo flight was going from Mumbai to Delhi was sent back to its base, that is in Bombay, and it was taken into isolation. So this issue is persistent, and all the authorities and ministry is on high alert right now.
Okay, yeah, this is it's tricky. But I agree. The pace has just gone up quite significantly. Be mindful of this for sure. Okay, some stocks flying around in trade. Granville Norton has shown a bit of a spike in the last few minutes of trade. Do keep an eye out for that one. I think Nuvama picked up even more from where it had left off. So I think that is the other one you got to keep in mind. Siaram is up about 5% in trade as well. Look at that Nuvama move there. But Siaram about 5% and a bit of a spike on that stock too. Sundaram Fasteners has inched up as well. Ruchit, anything out here that stands out for you? All of these are spiking in the last few minutes of trade.
I think Sundaram Fasteners looks quite strong over here. We have seen that recently also. The entire consolidation which was there since the month of July, there was no volume-based correction. Post that consolidation, which just seemed to be a time-wise corrective phase, the stock is now resuming its uptrend. So I think if one has to take a fresh exposure, then even at current levels, one can go long with stock below 1400. And if the breakout, we see a follow-up move of the breakout, then one can expect levels around 1650 levels.
Okay. What about Devin? What about auto anchs? I mean, autos might be uninvestable. By the way, do you have a view on the Hyundai IPO? But what about auto anchs? I mean, are there some good pockets there?
So Hyundai IPO remains, I think, a favorable bet for some of the large institutional investors. For them, I think to park large sum of money in one of the largest, I think, the IPO that one has seen, definitely I think makes more sense, because they wouldn't get, I think, this kind of opportunity to park this kind of large money into a particular company which has got a plan in place. So for institutional investors in particular, I think this remains, I think, one of the favorite pick, also because of the fact that it is providing good amount of liquidity to invest money into. At the same time, I think most of the institutional investors would have the appetite to add a new name into the book as far as the auto OEM is concerned. And that's why this company would remain relatively more formidable kind of a proposition from that perspective. Whether it is going to make a whole lot of a change in their business model with this kind of listing that they are doing, answer is no. Because money is not going for growth capital, money is going to pay for the promoters in general. At the most, I think the Hyundai South Korea will have some great amount of balance sheet numbers looking with this money that they are collecting of $3.5 billion. So from that perspective, I believe that I think it is good for them. Retail investors, those who flip the IPO, for them, I guess I think there is nothing much to talk about, at least at this point of time in this particular IPO, because they are flippers. Coming to the the ancillaries, I feel that I think an excellent time to buy into some of the good quality companies. On one side, I think they have got a huge amount of shift which is taking place with the flex engines coming in, with I think the newer generation of vehicles coming in, with every single OEM talking about at least 4 to 5 new models being launched in near future. I believe that I think the OEMs will probably drive some of the ancillaries very, very smartly. And those companies which are having the engineering along with the R&D and probably providing the ADAS systems, I think that they could be possibly one of those favorables. The likes of Minda, the likes of Minda Corp, respective segments in which they cater to, they probably remain, I think, relatively more choice players as far as their ability to service this kind of a change in the economies and particularly in the OE segment of the automobiles. So we remain distinctly positive. We also remain very positive because of the fact that I think the commercial vehicle segment per se is showing great amount of, I think, growth potential given the spending that the government is doing on infrastructure side. So some of the ancillary companies are likely to play well in this particular proposition. Maybe most of the companies are adequately priced today. Market, if at all it gives some time correction, probably it will be a great opportunity to buy. because it doesn't look like that the market will give price correction in some of these companies. So maybe one will have to buy and buy with the time correction.
Okay, thank you so much for that comprehensive answer as well as for your time, Devin Bhai. We'll let you go on that note. Thank you for joining us today and giving us all of those views. Let's shift focus, or rather, redirect focus back on HDFC Life, because that one is buzzing since the morning. We spoke with, Ms. Vibha Padalkar, and, change in guidance, of course, margins no longer the focus, but can margins come back to 25-26%, and are these factors which are plaguing margins temporary? Listen into a slice of what she had to say on that.
Absolutely. Because I'm very confident that, the unit-linked uptick that we are seeing is a market phenomenon. And as and when the cycle turns, and cycles will turn, we are fairly confident that our sales teams can virtually switch to various other products that we have in our arsenal, depending on whatever is topical at that point in time. And as that happens, margins can only move upwards from there, because unit linked, as one knows, do deliver fairly low levels of margins. So it's just that triangulating between growth, margins, and value of new business, we do see any pull back on unit linked in favor of, it could be par, it could be non-par, it could be annuities, pension, whatever anything other than unit linked will mean better accretion to margins.
Okay, so that was, of course, the view coming in from the MD CEO of HDFC Life. Now, if we can pull up the 5-year chart on HDFC Life, stock returns just about double-digit, 20%, something around mid-20s is broadly what I'm guessing would be the return. But what you're seeing, say, over the last 3 months or maybe 4 months, since June, since the lows of June, in fact, when I'm looking at the chart, stock is up 36% from around the 530 mark to now at 730. And even when you're looking at maybe the 5-day chart, we've seen, of course, a bit of a fall in trade yesterday, but today stock has been resilient. Ruchit, just your views with regard to technicals on this one. It's a Nifty 50 counter, given 36% returns if you've correctly purchased it maybe sometime in June. But from a technical perspective, how should one make a trade?
In the short term, there's some consolidation since last 1.5 months. And at the start of September, the stock made a high of around 760, and post that it has just been trading within the range. But in this entire consolidation, it has not breached its important 100 EMA supports. So this indicates more of a time-wise correction within an uptrend. Until this 100 EMA, which is around 680, is intact, I think the longer-term trend still remains on the positive side. So I think if one is looking from a very short-term perspective, we might not see any significant directional moves. But yes, this time-wise correction gives a good opportunity for long-term investors to get in the stock. If one can keep a view of around 6 months, then these are good levels that one should look for buying opportunities. Keep stop loss below 650, and once the stock resumes its uptrend, you can expect a high top, high bottom structure again in this one.
Okay, that's the view coming in on HDFC Life on technicals. Stock, of course, doing decently well on an otherwise tough day of trade today. Switching focus though to FMCG, earnings season in full swing. What's in store for the FMCG pack? Mahima joins us with a complete breakdown of earnings expectations this time around, Q2 FY25. Over to you, Mahima.
Right, so for FMCG earnings, they'll kickstart from tomorrow with Nestle coming out with its results tomorrow. But well, overall in the FMCG space, it's going to be a mixed Q2 overall. We might see some kind of uptick in revenue as well as margins, but let's go through how demand will play its role. Well, demand is set to have a minor uptick, and rural demand is expected to have, it's expected to, of course, continue to report a gradual recovery, and we're expecting that rural demand will outpace the urban demand once again, third quarter in a row. In terms of volume growth, recovery in volume growth is expected. It could be anywhere between a low single digit to a mid single digit growth in terms of volume. In terms of revenue and expansion, well, revenue will likely grow on the back of volumes and not pricing, that is value. And
there will be a steady improvement in margin for some pockets, but in some pockets margins might see a little downtick on the back of higher raw material prices. Now in terms of key things to watch out for, well, heavy rains might adversely impact demand, especially in paints and beverages. Telecom hikes and food inflation, are a bit negative for consumption, so this could likely play out in a bad way for the demand for FMCG companies. In terms of now estimates, to start with revenue, well, let's see pockets which are going to see maximum revenue growth. Tata Consumer is set to, this is as per Bloomberg estimates, it's set to grow around 16%, and Britannia is set to have a 9% overall revenue growth. But some pockets which are expected to have a degrowth in terms of revenue include stocks like Dabur and ITC. Dabur might see a revenue degrowth of 3%, as well as ITC might see a degrowth of around 4%. This is, of course, as per Bloomberg estimates. In terms of margins, let's pull up that and see margins. Well, ITC, though it is expected to see a degrowth in revenue, margins might pick up for the company by around 90 basis points, and Godrej might see an uptick in revenue by around 44 basis points. But for companies like Britannia and Dabur, margins might take a slight hit. Well, in terms of Britannia, it's not slight. Margins might take a hit of around 170 basis points. And for Dabur, it might be around 141 basis points. In terms of profits, well, two companies are set to have excellent profit growth. That is Godrej Consumer, which might see around 18% uptick in their profits, and Marico might see around 11% of uptick in profits. But two companies which might see a degrowth in profits include Dabur and Nestle. Dabur might see around 2% downtick, and Nestle might see a downtick of around 2%. So overall, Dabur might see a muted quarter or might even see a negative degrowth. But some pockets like ITC, Nestle, could see a good quarter overall. And in terms of valuations, of course, valuations for FMCG companies have always remained expensive, but few counters which have improved in terms of valuations include Nestle, where Nestle was trading at around 80 times in Q2 FY24, which might improve to 68. Tata Consumer, which was trading around 64 times, could go to around 37 times. But pockets like Britannia and Godrej Consumers are the pockets where valuations might become more expensive. Where Britannia was trading at around 43 times in Q2 FY24, it might go to 58 times in Q2 FY25. And for Godrej, which was trading at around 58 times in Q2 FY24, might go to around 70 times in Q2 FY25. So overall, it will be a mixed quarter for different pockets in FMCG.
Okay, mixed quarter, but going to be a very interesting quarter. And also very interesting is going to be commentary with regard to how rural recovery is really playing out, because that's been a big theme, at least over the last 3 months or thereabouts. Ruchit, before I ask you for certain picks in FMCG, your quick BTST ideas, because it's 322 almost.
So I'll go with Deepak Nitrate. The stock in last 2 or 3 trading sessions have managed to bounce from its medium-term support, and today it has even given a breakout above its falling trendline resistance. So the structure looks positive. Even in the falling market, we are witnessing a relative outperformance in the stock. So from a BTSC perspective, one can buy with stop below 2940 for potential targets around 3,100.
It's interesting, Deepak Nitrite. Agam was pointing out in the morning about some long positions being added in yesterday's trade as well. And it was a call on the options side, if I'm not wrong, from an analyst in the morning from JM Financial. Ruchit, is this a longer term trend change, or is this just a play for that pop to 3,100? Any thoughts here?
3,100 Niraj just is a BTSC target. But if I look at the positional chart sector, then positional charts looks quite positive. Because the kind of decline that we have seen in the month of August, it formed a high of around 3,200 in August. September, mid of October, last 2.5 months, the stock has seen a gradual decline, but there was no volume-based selling in this decline. So when the stock prices were going up, the volumes were good. When there is a price decline, the volumes are very low. I think that's a good structure if one is looking even from a mid-term perspective. So I think that for medium-term, the support base has been set at 2,750. So I think till now, the stock is trading above this 2,750, which is the 100 EM as well. So I think the stock should do well. Maybe all-time highs could also be tested very soon.
Okay, watch out for this one as well. That is Deepak Nitrite. What else? Just trying to see if there are stocks with others which are kind of flying around in trade. Just wonder, Ruchit, if aside of the chemical space, if there is something else that may stand out for you. So one is Deepak Nitrite on the chemical side. Okay, give me a chart check on this one because it's gotten off the circuit today. Transformers and rectifiers, after having a series of upper circuits, is flat today. What do the charts suggest here? TRIL.
So there's no doubt about the trend. No, about 4 or 5 trading sessions we have seen continuous back-to-back circuits. Even today, although it's not at circuit, but still the price volume action is positive. Previous all-time highs for the stock were around 850. That has been surpassed. So this should lead to a continuation of the uptrend. And if I put retracements on the recent correction, then that gives a potential target somewhere around 1000 to 1050 range. So I think we could see a gradual up move in the stock towards 1050.
Okay, thanks so much for that, Ruchit. We'll let you go on that note. And as we, slowly start wrapping for the day as well, time for some top market voices. White Oak Capital's Ramesh Mantri is of the view that the pharma and healthcare segment looks favorable, at least for this earnings season, and also talks to us about the top picks from the broader markets. Listen into a slice of that.
So see clearly, where we see opportunity is in BFSI, in pharma and healthcare. Our technology, we are more neutral. We are clearly seeing, and then there are pockets of very high growth in India, which is basically, I would say, a lot of tech-led businesses. Some of them have gone public in the last 3-4 years in the markets, right, where there is very strong growth. And then there are strong pockets of growth, let's say, in electronics manufacturing, on the power side, and of course, select jewelry retailers. And then there's an odd company like in apparel retailing that's growing very difficult to understand in this kind of economic environment to grow at those rates. So those pockets of growth where the growth is very high in India, those of course, valuations while are not cheap by any measures, but still tolerable. While value is clearly there on the banking side, on pharma, on IT is also, if growth comes, value is going to be there in IT also. Yeah, so after 4 years of strong growth, this kind of growth in earnings is hard to replicate, right? We are getting some base effect in place now. And as I said, as economic indicators are slowed down, it will start impacting corporates. We are seeing even in consumer sector, a lot of fair amount of weakness. So yes, you're right. That one has to be, I would say, keep a balanced approach. One needs to now look at closely asset allocation, maybe start looking at even more balanced approach. Avoid real pockets of exuberance, which are in small caps and micro caps and all, and be more tilted towards large caps. And avoid sectors with a lot of exuberance.
Let's see if there's a tilt towards large caps today because it's a flat market otherwise. But as we wrap up the markets, bring up the benchmarks, and there's been a pull back, you have to admit. We're ending close to or at the lows of the day. Maybe IT is pulling that lower, I don't know. Get the heat map up on the screen very quickly because it's interesting as to what's happened in the Nifty in the last few minutes of trade. So autos down, but IT, yes, certainly down. Infosys down about 2%. So that is now contributing big time. Trent is, of course, down about 4% through the trading day today. And I guess some of the gainers have lost some of the sheen because HDFC Life is now just 1.67%. HDFC Bank is just about 1%. Reliance is less than 0.75%. So I think that is what is played out. So some nervousness in the last few minutes of trade in the large cap space, Hersh. Maybe mid caps are okay.
Yeah, let's pull those up and not really. You're seeing around 1/3% of a cut there as well. But small caps, let's pull those because I believe those were trading in the green till as long as I saw. There you go, 50% higher. Let's look at the advanced decline as well. Quick check on the breadth before we go to the BSE 500. That indicates that we've closed for the day. But there you go, breadth absolutely flat. It's been a whipsaw kind of a day, especially where the breadth is concerned. No consistency pretty much all through the day. But let's pull up the BSE 500 to kind of wrap today's show. Those are the big movers. Of course, a lot of those on the back of numbers, KEI, Rallis and the like. A lot of AMCs also on that list. But that's how we're playing out this Wednesday.
Yep, asset managers or capital market plays really looking strong. But from Hersh and me and the team that has put this show together, thank you so much for tuning in. See you with the live markets tomorrow at 8 a.m.